Today is September 6th. Hello everyone, this is Daily US Stock News by Kyle, bringing you the latest stock market updates every day. Please subscribe and stay tuned for more videos. Unexpectedly cold ADP jobs report, AI stock C3AI and charging station stock CHPT plummet. The unexpectedly weak ADP report, released before the market open, may alter interest rate cut expectations. U.S. August ADP employment grew by only 99,000, the lowest in 3.5 years. The forecast was 145,000, and the previous figure was 122,000. This further proves that the labor market is transitioning to slower growth, with hiring now below pre-pandemic levels. When the ADP data was first released, recession fears resurfaced. The US dollar and Treasury yields plunged briefly, and US stock index futures also dipped. However, while corporate hiring has slowed significantly, layoffs have improved. Data shows that companies are reluctant to directly fire employees, opting instead to shrink hiring to cope with high costs and interest rates. Initial jobless claims fell to the lowest since early July, and continuing claims also declined. This shows that while labor demand is softening, the labor market remains robust. Investors are hoping that a global rate-cutting cycle will boost the economy and achieve a soft landing, potentially extending this economic cycle until 2025. At 10 a.m., the U.S. August ISM Services PMI was released, recording 51.5, the highest in nearly 2.5 years, surpassing expectations of 51.1 and the previous value of 51.4. Services contribute 70% to 80% of U.S. GDP, and the continued moderate expansion in the services sector supports the possibility of a soft landing. Consequently, the Nasdaq 100 and S&P 500 hit intraday highs after the ISM data was released. Trump promised to cut the corporate tax rate to 15%, down sharply from the current 21%, to boost domestic production. He also warned that companies outsourcing jobs would lose tax incentives. While this would benefit large corporations, it may lead to an increase in the fiscal deficit. In contrast, Harris advocates raising the corporate tax rate to 28%. Investors are now concerned that tomorrow's non-farm payroll report may also disappoint, and both bulls and bears are cautious. 1. Broadcom. After releasing its earnings, Broadcom's stock dropped 5%. Its Q2 revenue was $13.07 billion, plus 47%, versus an expected $12.98 billion. Semiconductor Solutions revenue was $7.27 billion, below the expected $7.41 billion. Broadcom posted a net loss of $1.88 billion, compared to a profit in the same period last year. The loss was mainly due to integration costs and asset amortization related to Broadcom's $61 billion acquisition of VMware, which dragged down overall profitability. Wall Street believes Broadcom's profitability will gradually recover over the next few quarters. 2. AI stock C3AI. The company stated that economic uncertainty has led businesses to tighten spending. C3AI's Q2 subscription revenue missed expectations, causing the stock to drop nearly 18% at the market open, though it recovered half of the losses by the close. For FY25 Q1, revenue was $87.2 million, plus 20.5%, beating expectations of $86.94 million. However, subscription revenue was $73.5 million, below the forecast of $79.1 million, reflecting weak demand and business instability. The likelihood of accelerated revenue growth, margin expansion, and the bottoming out of backlogged orders remains limited. 3. Tesla. Tesla was the standout performer today, with its stock surging by as much as 7%. Meanwhile, Google has been the weakest among the big 7 tech giants recently. Aside from Tesla, other Western EV startups and charging station companies are struggling in the capital winter, with their only hope being a significant rate cut from the Federal Reserve. 4. Charging station stock CHPT. ChargePoint's stock plummeted after the company reported a decline in Q2 sales and weak forward guidance. Q2 revenue was $108.5 million, minus 28%, below the expected $113.5 million, with a per-share loss of 16 cents, compared to last year's loss of 35 cents, in line with expectations. The company plans to restructure, cutting 15% of its workforce. Demand for EVs in the US and Europe has dropped significantly, especially in Europe, where subsidies have ended, and the high cost of EVs has dampened consumer demand. If Trump wins, it's expected that EV subsidies in the US will also be canceled. Traditional automakers are abandoning short-term full electrification goals. 5. NIO's stock surged 14% after its earnings report. Q2 revenue was 17.45 billion renminbi, up 99% year-over-year and 76% quarter-over-quarter, setting a record high. Net loss was 5 billion renminbi, narrowing by 16.7% year-over-year. Vehicle deliveries for the quarter were 57,400, up 144% year-over-year and 91% quarter-over-quarter. Gross margin on vehicles was 12.2%, and cash equivalents stood at 41.6 billion renminbi.